Welcome to the Big Four Accounting Firms podcast, brought to you by thebig4accountingfirms.com. Check out our blog and subscribe to our podcast for career advice, recruiting secrets, and the latest Big Four news. Hope you enjoy the show.
In today's podcast, we're going to be covering the Big Four performance review process, and we're also going to provide an overview of that performance review process, and then we're going to perform an analysis of the performance review process. The performance review process in the Big Four is really where the rubber meets the road. It's where everything regarding your career is determined. It determines whether you will get promoted, whether you get a good raise, a good bonus, or whether you'll be coached out of the firm. This is also where new partners are determined. It's essentially the end goal of a career in the Big Four. It sums up every single year of your performance in the Big Four. If you've always dreamed about working at the Big Four and having a great career in the Big Four, then you should be thinking of your approach for each Big Four performance review season. The performance review process involves having your performance for the year analyzed and recorded officially with human resources. This is an essential part of any corporate job because lawsuits and legal issues can arise from not having performance reviews and providing feedback to employees. The official performance review process is really just for documentation for human resources purposes to have a consistent review file. And this review file is where HR can track your performance, but it's also where you can track your own performance, and it helps human resources determine compensation every year. Additionally, if the Big Four want to get rid of people, the performance review process is typically where that process starts. And I wanted to go over this today because the annual performance season is upon us at the Big Four. The Big Four's fiscal year ends are coming up, so this is a good time to start thinking about this and going over this. Okay, first off, I wanted to go over the official performance review process. And these processes typically align with the Big Four's fiscal year calendars. That means there are typically 2 review points each year, one at the end of the fiscal year for the firm you work at, and one of the middle of the fiscal year of the firm you work at. And the Big Four typically send out emails about how the process works internally, and they also give you insight into the timeline of the review process for you to submit your performance review requests. And they also provide the timeline for when you can expect your feedback to come back to you. And lastly, they provide a time for when your group review meeting is. And only group leadership is invited to these group review meetings because performance is reviewed on a group basis, and groups are aligned by market, line of service, and industry. For example, if you work in financial services consulting in London, then you would be assessed against other individuals in the London consulting financial services practice. You would not be assessed against other groups in the firm. The performance review process begins with you initiating a request to your supervisor to review your work, and you have to summarize the work that you did during that time period. Depending on the firm that you work for, you will have at least 2 review periods a year, the mid-year and the end of the year, as we spoke about before. Now, after you submit your request, the person reviewing you for that engagement will rate you on your skills and contributions to your team. Typically, there is a skill rating system. Some firms just have a generic feedback form where your feedback is provided in a more general form rather than on a skill assessment rating. And the feedback is usually provided around business skills, like your ability to complete technical work, your ability to communicate, your ability to delegate, your ability to understand responsibilities, your ability to perform work by yourself with little to no guidance, or your relationships with clients. And after you receive these skill ratings or performance ratings for all your client engagements, they are typically submitted to your coach or mentor at the Big Four. And that mentor then takes all those reviews and presents your file to the leaders of your group. That pretty much summarizes the logistics of the performance review process. And now that we've covered that, let's go into a little deeper analysis. One thing that confuses a lot of people during the Big Four review process is that they think the process is completely objective and transparent. Now, this isn't completely true. So much of it is subjective and happens behind the scenes. It is determined by personal relationships a lot of the time. Very little is determined based on a person's ability to work hard and to be a technically strong accountant. And because of this subjective nature, the Big Four review process should never be a surprise for you each year. You shouldn't feel like you're getting blindsided every review season. You should always try to know ahead of time how you're going to perform. If you don't, then you're really leaving your review up to fate. The real decisions during the performance review season are made behind the scenes, before the performance review season is really in full force. Partners know what ratings they are going to give people for the most part. But even then, it is not always up to the partners to determine how review ratings will be distributed. Sometimes rating distributions are determined by firm leadership in conjunction with HR. Firm leadership will provide guidelines on how to rate individuals. HR then receives that information from leadership. They are told how many people can get the top ratings that year and how many people need to get the lowest ratings. If the firm or group is performing poorly, then the leaders of that group are also told how many of those lowest rated people need to be fired or removed. And this is becoming a lot more common in the Big Four accounting firms recently because they overhired at the lower levels. This isn't just one firm either, it's multiple firms. Multiple firms overhired, so I've been seeing this a lot across the board at the Big Four, where the lower tier associates are more likely to get documented out of the firm. In the past, that wasn't the case. In the past, even if you were a bad performer, they kept you around because more bodies meant more revenue. However, the Big Four see that clients don't value associate work anymore. They value technology. This is because the lowest of the low at the Big Four don't have many skills that can be utilized by clients right away. Associates have to learn before they can contribute. And I think this is why accounting curricula at colleges around the world will change to include technologies like data and analytics, similar to what the curriculum that KPMG is developing with multiple United States universities. Big Four candidates will be expected to know how to use technologies like Alteryx, Salesforce, and Tableau right out of the gate out of college. And this is because you don't come into the Big Four knowing how to read a ledger or how to prepare a tax return. Oftentimes you step in the door at the Big Four and you don't know that much, and you're working with people right away that aren't interested in training you. They're just trying to get their work done. They rather utilize software to perform the work that associates used to do. And there used to be things that associates could contribute to right away, like using a copy machine to make copies or having to fax a bunch of documents, or they could even be utilized to tick and tie physical work papers. But a lot of the need for that type of work has been removed by technology. So to get rid of associates that the Big Four don't need, they try to bucket as many associates as possible into the lower tier of performance rating. And that's just something to be aware of as you're going through your performance review. But with that being said, partners know who can get the highest rating and who can get the lowest rating. But that's determined before the review meetings that we referenced earlier. And based on those tiers that's determined at the leadership level, your performance review will fit into those predetermined buckets. But those predetermined buckets might not actually fit your performance. For example, even if you get a good review from somebody you work with, there might not be enough room for you to be an outstanding or top performer. People might really like working with you, but there's not enough room for everybody at the top to get top performer. So you might just get bucketed into being an average performer or a low performer. Another reason the Big Four might not give top ratings is because of compensation. If they give people top ratings, then they might have to give those same people a top compensation package or a really large bonus. And this is because the Big Four HR handbook requires top compensation to go to top performers. And in order to keep compensation costs fixed or low, they will try bucketing more people into the middle of the pack or a lower tier. You have to be careful of partners. And with that in mind, you have to be careful of partners and markets in the Big Four that aren't performing well or that have lost a lot of clients because there's more tendency for people to go into those lower buckets in groups like that. If your partners aren't real active in selling work, then you're not going to generate that much revenue in your group, which means that your group won't be allocated additional compensation for bonuses or salary increases. And one thing to keep in mind is that partners are selfish during review time, and any increases in compensation across the firm go to them first. Then they allocate compensation to the staff. So you don't really want to work in a group where your partners are not that active in selling work or maintaining good client relationships. Even if you're a great performer in a lower performing group, you might not get a good rating or a good compensation package. And what all that points to is that a key part of the performance review process is going to a group that is doing well. If the group is doing well, then you're more likely to receive a good review and good compensation. And this is where it's key to keep your ear to the ground on emerging trends. You have to pay attention to our podcast and our website to stay tuned to what are emerging trends. For example, industries that are growing like blockchain and cybersecurity. And there are also certain parts of tax groups with U.S. tax reform emerging that are also growing quickly. You want to trend towards these groups because these groups are going to get additional compensation and you're more likely to receive a better review. And the reason you're going to receive a better review in these types of groups is because there is so much work to be done in these groups that If you just help by removing a small amount of work from somebody's to-do list, then that is enough to give you a high review. Alternatively, if you think about a group with no work or the same type of work year over year, it's hard to stand out because there isn't that much work to go around. With the little work that is going around in that type of group, you really have to outperform in order to stand out. If you want more guidance on how to write the best performance review and prepare for the Big Four performance review process, then you need to make sure to subscribe to our podcast. But we also have a Patreon page where we have released an additional podcast on how to have the best performance review at the Big Four. We're also going to have content such as performance review checklists and guidance on how to set goals each year on that Patreon page. A link to our Patreon page is included in the show notes.
If you need help and guidance through your Big Four recruiting process, make sure to check out our links to our books and courses in the show notes below. For additional Big Four career insights, tips, and tactics, visit our Patreon page, whereas for as little as $1, you could start receiving unique guides and checklists to help you throughout your career. Support us by not only donating to our Patreon page, but also by subscribing to our podcast on iTunes, Google Play, Stitcher, or your favorite podcast player today.